Hello friends, in this video I want to break down a very important topic. This is lesson number 5 of the Options Are Easy series, and today's question is: how much is an option worth? How do you calculate its value? Let's start with where you can calculate the value of an option. You can do this directly in the option board of the AE Exchange web terminal. Now the options board is in front of us. Let me remind you just in case how to open this board. It's easy in case you've forgotten. We go to the board and choose the basic asset we're interested in. In this case is the BCTM23 Bitcoin futures, or Matic, Ether, Dogecoin, but we'll work with Bitcoin. Okay, right click and select Open Option Board just below. We did, and the options board opens. Check it out. You can see more than one series of options on the same board. Let me show you. First we close this series, and now we only have one displayed. Here in this drop-down menu we can now open another expiration date, and then it will open a series with a different expiration date. Right now we have 4 series of options available to us, 3 weekly and 1 monthly, also known as the quarterly series. We can add another series of options here as well. In the middle you can see strikes and the Ivy that the exchange broadcasts. We can replace it with one that we created ourselves. I showed this in the last lesson about volatility curves. On the left are the call options, and on the right are the put options. And each series has a different expiration date. So, how to do the calculation of the price of an option? On the left you have the T price column, that is the theoretical price. And then there are the option Greeks, the delta, gamma, theta, vega. About the Greeks I will inform you in the following lesson. Now I tell about the calculation of the theoretical price of an option, because I get a lot of questions on how to do this kind of calculation with the AE. It's simple. If online is checked here, then all calculations happen online and we can't influence it. Except that we can change the IV of the option. By unchecking the online box, we now have the ability to set the price of the basic asset. For example, right now the Bitcoin future price is 27,907, and we can set what will happen with the options prices. For example, look at this option of strike 29. 140 is its theoretical price. Let's assume that the price of this strike goes up. And now we see that the price has changed to 520. It was 143. With the call option growth up to 1,100 points, which is less than 5%, the price has actually tripled. We can also change the volatility by setting another volatility. We can do this with the wheel to see what would happen with volatility of 50 or 70. Let's say volatility went up sharply. Then its price would be 815. The theoretical price has gone up. We can also see what would happen if volatility goes down. Then the calculation for call options and put options will change. We can also look at calculations for different dates. What happens if 2 days pass? We change the date and what do we see? The price of the option went down because the time decay took effect here. And because of that, the time award of this call option was eaten. If we're interested in theoretical price and strikes of call options, we look to the left. If we're interested in put options, we look to the right. If we want to go back to default calculations, we just go back online. The quote has updated. The price is again 27,829, going up as usual. And all the data has rolled back to the defaults, except the IV. IV remains the same, but we can set it to different values online. But if we remove it, the default IV will return. Now I will demonstrate something. I will put a different volatility, but my charts are kind of weird, so no, I will return back to default. And now the simplest thing. If we want to see the position we need on the P&L chart according to these calculations, then we just specify the needed amount. Let's say I want to sell the 30th calls. 1,000 contracts for 1 Bitcoin, although I got a little carried away when I said about 30 calls. They are worth almost nothing. Let's consider the 29s better. and the 27th, I think. Here you see I changed the number of contracts and then I press New Chart button. And now we have the P&L chart displayed. This is the chart of our strangle that we sold. And one more thing. If we start to change something here, like expiration dates or price, just a second, I'll get out of online mode and start modeling. It's already clear from the curves for which time what P&L will be. But I'll change the date to the end of the month, and you see that all the calculations for that date have changed. The main thing is to turn off the online mode. We can also change the volatility of price of the basic futures asset. All calculations are presented not only numerically, but also in Greeks. We will talk about the Greeks in the next lesson, because this topic is very important. Remember, an option is pure mathematics. Lots of numbers, only exact values, the buy price, the sell price, how much was the award, what is the probability that this option will be in the money. I will tell you all this later. If it was interesting and useful, like the video and subscribe to the Options Trading channel. Ask questions, I will try to answer all of them. Have a successful options trading and I wish you all the best.